dollars are debt. In other words, when one holds a dollar, a central bank, they hold a debt asset. And generally speaking, the world is holding a lot of US dollar denominated debt. So the holders of that would say, I'm already overexposed to US dollar denominated debt. And so there's less of a eagerness to buy the debt. And that eagerness to buy the debt is also reduced by, two main things.
Ray Dalio, the billionaire investor and founder of the investment firm Bridgewater Associates, was recently asked to share his thoughts about the increasing debt crisis. He further talked about the situation with Silicon Valley Bank. Dalio also gave some investment advice and warned of key geopolitical and economical risks. The Bridgewater Associates founder and investing veteran also offered up his thoughts on why he thinks the next 2 years will be a very risky time. According to Dalio, we've been in the 12th and a half economic debt cycle since 1945. He explained that these cycles involve economic weakness, stimulus, debt, inflation, and monetary tightening. Dalio pointed out that in 2020, the combination of COVID-19 and a shift in wealth distribution led to the government sending out checks to citizens. This funding was provided by the Federal Reserve, leading to an imbalance and a lot of money in the system. As a result, we're now experiencing higher interest rates, with cash becoming more attractive. Dalio emphasized that we're witnessing a classic cycle, but with the accumulation of debt and money since 1945, there are concerns about the value of the dollar and the global economy. According to Dalio, the failure of Silicon Valley Bank is a canary in the coal mine early sign dynamic that will have knock-on effects in the venture world and beyond. He believes that this situation is a clear example of the bubble bursting part of the short-term debt cycle, which is a common occurrence in the economy. Let us now get into the video as Ray Dalio talks about the imploding debt crisis and the various financial dynamics. He also talks about the changing world order and sparks of US and China increased tension. As you watch the video, ensure to give us a like, subscribe, and drop your comments.
What happened in this period is that a lot of government debt was sold. And it was sold to a lot of buyers. So when you look at Silicon Valley Bank situation, it's important to understand that that's just one example of an enormous number of cases in which short-term borrowing was used to finance the purchase of a lot of government bonds and beyond bonds beyond that, mortgage payments and also corporate bonds and so on, because money was given away free. I mean, think about it this way. The interest rate the government interest rate was 0.7%. Low-grade credits were about, 3.5% interest rate, but they also had interest-only loans. So it meant you really didn't have to pay hardly anything to get money. So we have all of that debt and now the government bonds have gone down. And it's funded by short-term debt, which the cost of money has gone up. Now, that's not just banks. That's not just the United States. That's a world phenomenon. It existed in Europe because the central banks there in Europe provided money like that. Imagine they created negative interest rates for money. So how does somebody make money holding a bond that has a negative interest rate? The way you do it is you have a more negative short-term interest rate that you borrow to fund it. And so that's what went on, and that's what we have. So if you look at, let's say, if you marked to market the bonds that at existing rates, you have a lot terribly financially hurt, negative net worth entities around the world. The world is leverage long. So we have that dynamic going on at the same time as we have the other things that I was referring to. So that's the financial dynamic. Problem is we spend more money than we earn. We are in debt. And we have large wealth and opportunity gaps and large values gaps. And then there's a lot of fighting over those things. And they're not easy to repair at that stage because, let's say, what do? You want to get financially stronger. Okay, financially stronger means you earn more than you spend. Okay, how is that going to work? Okay, are we going to, okay, it's so easy to say earn more. Well, it's not easy to earn more. And then what? Or cut expenses? Like you're not going to cut expenses. And then you deal with taxes to try to make, let's say, make the balance, and people don't want to get taxed. So there's a fight over holding on to wealth and how that works. And then you have this polarity, and you say, well, you have to have this problem dealt with in a united way, smart, united way to make the difficult choices. But it's very easy to say, but you have that fragmentation.
Ray Dalio highlighted the interconnectedness of various factors that are currently shaping the global economic landscape. He pointed out that the ongoing money, credit, debt, market, and economic dynamics are being accompanied by internal and external conflict dynamics, which are having a significant impact on each other. According to Dalio, the 2024 U.S. elections and the U.S.-China conflict, as well as the U.S.-NATO-Russia conflict and others like that with Iran, are notable examples of these conflict dynamics. He believes that all of these factors will affect each other, leading to a potentially risky situation in the near future. Let us get back into the video and listen to what he has to say.
There are short-term cycles that build up to create a long-term cycle. So, for example, we're used to what's commonly called the business cycle or the short-term debt cycle, in which there's a recession when there's economic weakness and low inflation, and then the central bank provides credit, and that stimulates activity, and then you have the pickup and the good time in the economy, but then it raises inflation and tightness and so on, and then they create tight money, and then you go through the contraction again and so on. So since 1945, there have been 12 and a half of those cycles. On average, they're about 7 years long, give or take about 3 years. So if you say, okay, where are we in that cycle? We're in the business cycle. We're about halfway through. We're in the part of the cycle where the tightening of monetary policy to fight inflation begins to cause the cracks. And that's where we are. Okay, now those add up to a big cycle because debt rises relative to incomes through that because everybody wants the higher up. And so they just keep doing that. And so we have a lot of debt assets and debt liabilities. We think of there's a debt that you owe, but one man's debt is another man's assets. And so you have to keep interest rates high enough that it compensates for inflation for holding it. Because if you don't, nobody's going to then want to lend and you have a problem. But you have to have interest rates not so high that they crack the economy. And so when you have debt, a lot of debt assets and a lot of debt liabilities, having that balancing act is not easy. And so because we had the imbalance, the central banks of the world had to come in there and be buyers. They had to print money and buy that debt to make a balance at an acceptable interest rate. So we have that problem. That produced inflation, and we have the financial problem. Now that's connected also to what's happening in the world order, because the United States and China, most importantly, are approaching a war, the greater risk of war, and also Russia is in that there have been, supply lines, supply chains have been broken and supply lines and so on. And that has worsened this set of circumstances for reasons having to do with geopolitical and so on. What we're seeing now is the world order breakdown. So, for example, there used to be more of an international trading system. Trading existed, and it was like, how do you trade in general? Now that's broken down for the most part, and there's what we call bilateral. So one country with another, but it's broken down. if you take the development of technologies now, for example, one would like to be able to have a system for creating an agreed upon system of creating orderly management of technologies and so on. Yeah, otherwise you have a chaotic system. And the same is true for everything. The World Trade Organization, the World Health Organization, the United Nations, and so on, were the IMF. These systems were meant to be world orderly systems, and now they've become essentially irrelevant. And there's no, not totally, but largely irrelevant. And so we have this set of circumstances taking place in a disorderly way rather than an orderly way.
Dalio's understanding of this dynamic and what is happening now aligns with his belief that the series of bank failures is not an isolated incident, but rather a pervasive situation that exists throughout the economy. He notes that the Fed's intervention to guarantee all depositors is a response to this larger problem. Dalio emphasized that there is a significant risk of bad financial and economic conditions coinciding with bad internal and international conflicts, especially given the current leverage in the global economy. He summarized his view by stating that the next 2 years will be a very risky time. Overall, Ray Dalio's macro outlook suggests that he sees a complex web of interrelated factors that are contributing to the current economic and political climate. He warns of the potential risks and challenges that lie ahead and urges caution in navigating this uncertain terrain. He further gave investment advice and stated that diversification is the best way to invest. According to him, in my opinion, we should be well diversified. Keep in mind what I call the holy grail of investing, which is to have 10 to 15 good, uncoordinated return streams. Simply said, hold a well-balanced portfolio that holds both assets that do well when there are great productivity gains, equities, especially those that produce benefit from new technologies that produce leaps in productivity, and assets that do well when there is the devaluation of money. He further commented that he is not sure of anything. Rather, he believes that the key to good investing lies in achieving the balance of uncorrelated good return streams so that one's portfolio has little or no bias to go up and down as conditions get better and worse. We hope you enjoyed this video and have gained valuable insights from Ray Dalio's view. If you have any questions or opinions, do well to use the comment section. Also, do not forget to give us a like, subscribe, and turn on post notifications for future videos. Thanks for watching.